Page number 92, that's it. 12, payment process. Payment process is one important topic because for the coming exams we have some good amendments in that area, that is related to rule 86b. Okay, so see this. First of all, section 49 deals with ledgers. There are three ledgers which will be maintained by GST network on behalf of every registered person. What are the three ledgers which are maintained by GST network? Electronic liability ledger, electronic credit ledger, and electronic cash ledger. Electronic liability ledger contains the details of the liability, and from where electronic liability ledger will get how the monies will be reflected in electronic liability ledger. From our GSTR1 and GSTR3B, whatever liability that we report, that will be reflected in electronic liability ledger. And the liabilities are divided into total 5, that is tax dues, tax, interest, penalty, fees and others, tip FO. Okay, so these are the 5 heads under the liability, that is tax dues, interest dues, penalty, fees and others. Penalty is payable in case of offences, and interest is payable on account of delay in payment of tax. Fee is like nothing but late fee because of delay in filing returns, and others is any other amount under the recovery which will be payable by the person. So that will be there in electronic liability ledger. Whereas electronic credit ledger, so how the money will come into electronic credit ledger? Through 3B, mainly through 3B. If there is any other way through which electronic credit ledger will get money, so that will be through this form GST ITC 01 and form GST ITC 02. So what is form GST ITC 01? So 01 is a form that is required to be filed by a supplier who is taking the ITC on the closing stock in case of section 18(1)(a), whereas ITC 2 is in case of transfer of ITC from the transferor to the transferee. So the transferee will be able to take the credit for that ITC 02. So therefore, not only this ITC through 3B or ITC 1, form ITC 1 or form ITC 2 or form ITC 2A or form ITC 2A. So what is this? 2. So 1 is availment of ITC on closing stock 18(1), and 2 is for transfer of ITC, so in case of transfer of business. ITC 2A is in single registration getting separated into multiple registrations. So from that single registration, credit will be transferred. So electronic credit ledger will get the fund not only through 3B but also through ITC 1, ITC 2 and ITC 2A. And the balance in electronic credit ledger can be used only for payment of tax dues. The balance in electronic credit ledger cannot be used for payment of any other dues. So including payment of GST under RCM, we cannot use our electronic credit ledger balance. Then whatever money that is there in electronic cash ledger can be used for payment of any dues. And how money will come into electronic cash ledger? Whenever you make a deposit, so there is a payment challan, through that payment challan you make a deposit, so then the money will come into the electronic cash ledger, or TDS, TCS, which is deducted and remitted by the other person under GST. So suppose e-commerce operator will be deducting TCS and remitting to government on behalf of our GSTIN, so we will be able to take that as credit in our cash ledger, not in the credit ledger. And even TDS also the same, that is whenever we make supply to central government, state government departments or public sector undertakings, local authorities or any government agencies who are liable to deduct TDS, so whenever they make payment to us, they will be deducting TDS and that will be paid to the government on behalf of our name, and we will be able to take that as credit in our electronic cash ledger. So actually this will come in GSTR 2A, and from the GSTR 2A automatically it will go to our electronic cash ledger, which can be adjusted against our liability. And refunds. Suppose if there is any refund that is sanctioned on account of excess payment of tax, that money usually will come into the electronic cash ledger. In case of exports, usually that will be into the bank account, but some cases it will come back to the electronic cash ledger. So mainly on account of excess payment of tax. So like this, the electronic cash ledger will get the inflow, which will be used for payment of electronic liability ledger. Can we use it for payment of any liability? Yes, that is tax dues or other dues. For payment of anything, we can use this electronic cash ledger balance. Okay. So that is this, and these three ledgers are maintained by GST network on behalf of every registered person, and usually these ledgers will have a contra effect. Contra effect means, for example, input tax credit shows a debit balance for the registered person, but the electronic credit ledger input tax credit shows a credit balance. Same way, liability shows a credit balance for the registered person, but liability shows a debit balance in the electronic liability ledger. So like that, so it will have a contra effect. And then form numbers you need to remember here. Mainly this is useful for MCQ purpose. So there is PMT1. PMT1 is electronic liability ledger, PMT2 is electronic credit ledger, and PMT5 is electronic cash ledger, and PMT6 is payment challan. So three ledgers, 1, 2, 5. So electronic liability ledger PMT1, electronic credit ledger PMT2, electronic cash ledger is PMT5, and deposit challan, that challan will be PMT6. Okay. Now suppose if there is any balance in the electronic credit ledger or cash ledger, we can claim for the refund. Balance in the electronic credit ledger can be claimed for refund only in two cases. Only two cases. The excess balance in the credit ledger we will be getting as a refund. So number one, in case of inverted tax structure. What is inverted tax structure? The tax rate, not tax payable, but the tax rate on outward supply is less than the tax rate on inward supply, then we will get the refund of unutilized ITC. Because whenever my tax rate on inward supply is high, say 18%, and whenever the tax rate on my outward supply is less, say 5%, so I have more credit and less liability, so I will be getting refund of the unutilized ITC. Or in other cases like zero rated supplies, that is exports are supplied to SEZ. So in this case, inverted tax structure and zero rated supplies, whatever is the balance of unutilized ITC that I have, I can claim it as a refund. But otherwise the balance from the credit ledger we cannot claim as a refund. And cash ledger, there are no restrictions, anytime we can claim the refund. So whenever we are claiming refund from the credit ledger and cash ledger, remember one important point, to that extent the credit ledger and cash ledger gets debited. Okay, for example, this is very important because how much ever credit we can claim as refund, we have a formula in refunds chapter. Maximum refund equals to net ITC into export turnover divided by adjusted total turnover. Okay, say for example, if we are getting a refund of 1,20,000, we are eligible for the refund, but the balance in the electronic credit ledger is only 80,000. We will not get 1,20,000 as refund, we will get only 80,000 as a refund, because whatever refund that they sanction out of electronic credit ledger, that much amount will be debited to the ledger, and the ledger cannot go into negative. So therefore, whatever is the refund that you are getting, subject to balance in the electronic credit ledger. Same way, electronic cash ledger, you are eligible for the refund, but there is no balance in the electronic cash ledger, they will not give refund to you. Okay, because you have used it for payment of the liability. That is the logic. And refund from electronic credit ledger, already I discussed this point. Third point, then what are the modes of deposit of cash into the electronic cash ledger? So through challan we need to make a deposit. What are the different modes? Total 4 modes are there, but in practice only 3 modes are there. But whatever is there in the law only you need to remember, that is internet banking, debit card, credit card, NEFT, RTGS, and over the counter. So debit card, credit card is not there in reality, but that is also one of the option given in the rules. Okay, so net banking, debit card or credit card, NEFT, RTGS. NEFT, RTGS is an offline mode. You need to go to the bank where you have an account, you need to fill the challan, NEFT or RTGS challan, and you need to submit to the bank. The bank will take care of the transfer. Or over the counter, that is you have cash, so you can take the cash and you can make a cash deposit. And when you make a cash deposit into the bank account, so that cash deposit is towards the tax, but there is a restriction, 10,000 rupees only is permitted, not beyond 10,000 rupees. So up to 10,000 rupees per tax period is only permitted. Okay, then refund rejection order is passed in PMT3. That is, a refund order is passed in PMT3. What is this refund order? So refund order in PMT3 you need to understand. For example, I have some balance in the credit ledger and remaining amount I am paying through the cash ledger. Say for a particular month, I am just showing you the example related to this. Say that is refund to the source. Refund to the source account. What is that refund to source account? Refund to source account. For example, for a particular month you take, that is said for December 2020. December 2020, my liability, gross liability is 1,50,000. This 1,50,000 is discharged. This 1,50,000 is discharged through credit ledger and cash ledger. So paid through credit ledger, paid through electronic credit ledger. How much is paid through electronic credit ledger? Say 90,000 is paid through electronic credit ledger, whereas paid through electronic cash ledger, 60,000. So 60,000 is paid through cash ledger. So now what has happened for this month of December 2020, in this 1,50,000, so there is some excess payment of tax. Okay, so excess payment of tax, and that excess payment of tax is rupees 30,000. So this excess payment of tax of 30,000 rupees we will be getting as a refund. Okay, so refund claimed and sanctioned. Refund claimed and sanctioned. Refund claimed and sanctioned. Now, where this refund will go? The 30,000 will go to the bank account, that is electronic cash ledger or electronic credit ledger, or both. It will go to both electronic credit ledger as well as electronic cash ledger. To what extent it will go to electronic credit ledger? So credit to electronic credit ledger is, so we have made 90-60. So 90:60 ratio, or 9:6 ratio, or in other words 3:2 ratio. Okay, so 30,000 rupees into, so out of the credit ledger 3/5, 3/5, 3:2 ratio, yeah, 3:2 ratio. So 3/5 will go to the credit ledger and 2/5 will go to the cash ledger. So therefore 30,000 rupees into 2/5 will go to the cash ledger. Okay, so this is how. And for giving the credit to this credit ledger, so 30,000 into 3 divided by 5, that is 18,000 and 12,000. For giving this refund of 18,000 into the credit ledger, they will be passing a form, passing an order, refund order in PMT3, refund order in PMT3, whereas here the refund order is in RFD6. So this 18,000 will go to the credit ledger and this 12,000 will go to the cash ledger. So this is the order form. Okay, PMT3 is for the order into the credit on account of refund to the source account, that is credit ledger, and RFD6 is for refund to the electronic cash ledger, so or cash, okay, in bank. So that 12,000 rupees. So this is how there is refund to the source account, that is for purpose of PMT3. Okay, and any discrepancy in ledger is communicated through PMT4. Suppose if there is any discrepancy, some balance was were not correct, so that information we will be giving to the portal in PMT4. PMT4 is communication of discrepancy. And then PMT 5 and 6 we know. PMT 3 and 4 is missing, so I covered that. PMT 5 and 6 is cash ledger and deposit challan. PMT 7, that is whenever the money is debited from our bank account but is not reflected into the cash ledger, in that case we will intimate to the payment gateway through the common portal. So that intimation will be in PMT 7. And then PMT 8 is not there, but PMT 9 is there. PMT 9 is for transfer of balances in the cash ledger. So in the cash ledger, when we make a deposit, we need to make deposit into 20 cells carefully. So there are 4 major heads. The 4 major heads are CGST, SGST or UTGST, IGST and compensation cess. These are the 4 major heads. Against these 4 major heads, there will be 5 minor heads. So tax, interest, penalty, fee and others. So 5 into 4, 20 cells will be there. So whichever cell you wanted to deposit, you wanted to pay, so accordingly you need to make the deposit. So you made a deposit into the respective cell. Say for example, instead of IGST 20,000, you deposited CGST 10,000, SGST 10,000 rupees. And now you need to pay IGST of 20,000 rupees. So now already you deposited. At the time of deposited, there is a mistake. So now you can transfer the balances from CGST cell, SGST cell to IGST cell. So between these 20 cells, from anywhere to anywhere, you can transfer the balances. So for that, we need to file one form, that is PMT 9 for transfer of balances between the major heads and minor heads. So in electronic cash ledger, form GST PMT 9 is notified. Okay. Then, so actually PMT 3 is called as refund order here, not rejection order. it is like refund order. It's not called as refund rejection order, it is refund order only, because they will be sanctioning refund to the credit ledger. So that is this, okay. And then next one, sir, on zero rated supply we pay IGST, then we claim refund only on IGST paid. Can we claim refund on GST paid on inputs for that supply also? We pay on zero rated supply, we pay IGST, then we claim refund only on the IGST paid. No. So both are not possible. Either we will be claiming refund on account of zero rated supply if it is on payment of IGST, so that IGST alone we will get as a refund, or refund of the unutilized ITC with respect to the inputs used in that zero rated supplies. But both are not possible, okay. So only one is possible. PMT3 it's specified in the book says actually it is refund order only, not refund rejection order. It is like whenever we paid the excess amount, so the credit will be disallowed. So the credit will be disallowed by way of giving it back. So that is this. So therefore refund order only, you try to understand, okay. Then so that already I have explained here, refund order only. It is not refund rejection order. It is mentioned as refund rejection order. It is refund order. So what about refund of unutilized ITC? When they reject that refund, then also the money will be credited back to the ledger. So that's why even in that case also it will be coming into the credit ledger. So I am claiming refund of unutilized ITC. When I claim refund of unutilized ITC, what will happen? So they will reject the refund. So when I claim the ITC refund, so to that extent the credit balance of ITC will get debited. When they reject, again it will be credited back. Actually that is the case of refund rejection. So but that is not relevant here. So it is refund order only, okay. Then next one, rule 86B. There is one rule 86A and rule 86B. So rule 86A talks about, so there is a restriction with respect to utilization of input tax credit for a period of 1 year. So that is rule 86A. So whatever balance that we have in the electronic credit ledger, so that will be suspended for a period of 1 year, which means 1 year we cannot use. When? If the supplier is missing, or supplier is not doing business from the place where they have obtained registration, or if the recipient who availed the ITC is not doing business in the place where they have obtained registration, or if invoice is missing, or if they have availed the ITC without actual receipt of goods. So in these cases, whatever ITC that the recipient has taken will be suspended by the proper officer for a period of 1 year. So that power is there with the proper officer as per rule 86A. So that is already given, in the sense like already it was an amendment and it was already asked in exam also 2 times. And 86B is a latest amendment wherein whatever is your liability, out of that liability 1% will be payable through your electronic cash ledger only. But to whom it is applicable? So to those people whose turnover in a month exceeds 50 lakhs, to them only it will be applicable, and they have to pay 1% of their gross liability through the electronic cash ledger only. And even if there is sufficient balance in electronic credit ledger, they have to pay 1% through cash ledger. And what is that 1%? 1% of their gross liability. And to whom it is applicable? Those people who have a turnover more than 50 lakhs in a particular month. For them it is applicable. And what will be taken towards counting the turnover? Towards counting the turnover, we will be taking total supplies minus exempted supplies. So exempted supplies should not be taken in the turnover. Even zero rated supplies also should not be taken into the turnover. Exempted supplies includes non-taxable supplies, so that will also not come. Even taxes also should not be taken into turnover. So you should not take taxes, you should not take non-taxable supply, you should not take exempted supply, you should not take zero rated supply. So remaining turnover you see in that particular month, if it is crossing 50 lakhs, definitely that month this 86B will be attracted. So what is that they need to do? Out of their gross liability, 1% they need to make debit through the cash ledger and remaining amount from the credit ledger. They should ensure that, okay. And Suppose if they are not following this, this will become one of the reason contravention of the provisions for the purpose of registration. So in the registration chapter, so we have certain contravention of the rules. In that contravention of the rules, what are the contraventions? So 86B is also one of the contravention. If you are not following, that will lead to cancellation of registration by the proper officer. Okay, and then this rule 86B is not at all applicable to certain people. To whom that is not applicable? Government department, central government or state government department, then public sector undertakings, then statutory bodies and local authorities. Okay, so central government or state government departments, public sector undertakings, local authorities and statutory bodies, they don't have to comply with this 86B. So mainly they wanted cash inflow, for that reason only they created. Okay, so Chechi's cash balance has come down, so for that reason. And this rule is not applicable in the following cases: deposited income tax of more than 1 lakh in each of the last 2 years. So already that person is paying a tax, income tax of 1 lakh in the preceding 2 years, so therefore they are not required to comply with this, because already they are paying in cash. And any refund is sanctioned in the preceding year greater than 1 lakh, so that refund will not be granted to them. Refund is sanctioned, but refund will not be paid, so they will try to withhold that refund for the purpose of usage of the expense, and thereafter they will release it. So then because of that reason, they don't have to comply with 86B to that registered person whose refund they have withhold. Okay, so more than 1 lakh rupees refund sanction in the previous year, then paid greater than 1% cumulatively up to the current financial year, that is in the current financial year, so starting from April to that particular financial year month, whichever month you are calculating. So if already 1% has been discharged through electronic cash ledger, then they don't have to pay that particular month through the electronic cash ledger. For example, preceding 3 months we paid through electronic cash ledger, so cumulatively during current month also, if you take total liability, total amount paid through cash ledger, so the amount paid through cash ledger is more than 1%, so then in that case for the current month you don't have to go for 86B, you can go for normal, that is pay through entirely credit ledger, whatever you have. Related to this, I gave illustration in the amendment, so you can check the amendments video related to that. So one illustration I have given over there. Okay, so that is this 86B here, and this is one important area. 86A I have not given because it is already asked in exam, so but I am just orally explaining to you what is 86A. Suspension of input tax credit balance for a period of 1 year. So in which case, again I am repeating, supplier is missing or supplier is not doing business from the place where registration is obtained, recipient is missing or recipient is not doing business in the place where they have obtained registration, and they availed ITC without receipt of goods, or the invoice is missing. So in these cases, whatever ITC that the recipient has availed will be suspended for a period of 1 year by the proper officer. Okay, then we are moving on to the next area, returns under GST. Returns under GST. So here there is one query. Sir, if we pay CGST as GST instead of IGST, first we have to pay IGST and then only we can use PMT 9. No, Prasanna, because you are talking about electronic credit ledger manner of utilization. I am talking about electronic cash ledger. In electronic credit ledger only we have the restriction that IGST credit should be utilized first, and then only we need to use CGST SGST credit. But it is not about CGST SGST credit, it is about the cash ledger balance. So in the cash ledger we have deposited in a wrong cell, we can shift it to the correct cell for the purpose of payment of the liability. So for shifting of the balances between the cells we can use PMT 9. Okay, you misunderstood the context completely. And this 1% to be checked every month, sir, for 86B applicability. Yes, so we need to check for every month for 86B applicability. So current month turnover should be more than 50 lakhs, and cumulatively up to the current month they should not have discharged 1% of the liability through cash ledger. So then for the current month it will be applicable. So we need to check the applicability every month, and even this restriction also, that 1% like cumulative condition. So 1% of the total output tax liability cumulatively up to the month in the current year we need to check for the financial year. Okay, then sir, whether turnover limit of 50 lakhs in 86B is to be checked every month, or if any 1 month in a year means it is applicable for full year. No, for every month we need to check. For every month we need to check. So then only 86B will be applicable, because they did not give turnover during the previous year or turnover during the previous month like that. So turnover in a month is the wording that is used. So we need to check every month. Then we are coming to returns under GST. So in this returns under GST, QRMP scheme, quarterly return monthly payment scheme, is the latest addition. So people don't wanted to file returns on a monthly basis, can file the returns on a quarterly basis. But first of all, to whom this is applicable? Aggregate turnover during the preceding, like previous year or any quarter, previous quarter does not exceed 5 crores. So previous year it does not exceed 5 crores. So during the current year, first quarter, can we go for QRMP scheme? Yes. In the first quarter it crossed 5 crores. So for the second quarter, can we go for QRMP? No. So which means that during previous year or any quarter in the current year, we should not have crossed 5 crores. Okay. So then only QRMP scheme is applicable, which means that QRMP scheme, again, eligibility we need to check quarterly. Yes. So QRMP scheme eligibility we need to check quarterly basis. And for the particular quarter, so calendar quarter only, April to June and July to September, October to December and Jan to March. So for these 4 quarters we can file returns. Which returns? GSTR1 and GSTR3B on a quarterly basis. Previously there was one point, if the aggregate turnover during previous year does not exceed 1.5 crores, they can file GSTR1 on a quarterly basis, but they need to file GSTR3B on a monthly basis. So that point is gone. So now it is like for everyone it is the same. Aggregate turnover during previous year does not exceed 5 crores. So that 1.5 crore is gone, it is 5 crores. So then they can opt for QRMP, but when they opt for QRMP, both GSTR1 and GSTR3B will be filed on a quarterly basis. However, they need to make a monthly payment of tax, but monthly payment does not mean that they have to pay that amount of tax, that they need to ensure that there is balance, sufficient balance in the electronic credit ledger and the cash ledger. Okay, so they need to ensure that that much balance is deposited in the electronic cash ledger and credit ledger. That is this. Okay, and this GSTR1 is to be filed on a quarterly basis. What is the due date of filing GSTR1 generally? So generally the due date of filing GSTR1 is 11th of the month following every month, if it is a monthly GSTR1. So please make a change there. So if it is quarterly GSTR1, it is 13th of the month following every quarter. Okay, 13th of the month following every quarter. So GSTR1 has two due dates. If it is monthly filing, 11th of the month following every month, and if it is quarterly, it is 13th of the month following every quarter. And what is the due date of GSTR3B? Suppose if they are not under QRMP scheme, they will be required to file GSTR3B on a monthly basis. So they will be filing GSTR3B by 20th of the month following every month. Whereas if they are covered under QRMP scheme, so they have two due dates, 22nd and 24th for few states. Okay, for few states it will be 22nd and for other states it will be 24th. Okay, so that is the due date of filing GSTR3B here. 1 second. Now, what has happened? So this GSTR3B, when they file it on 22nd and 24th, in which cases 22nd, which cases 24th. So few states, but actually that states you don't have to remember. If you want to remember, you remember it like, so Gujarat, Maharashtra, and then Tamil Nadu, this South India. So below Gujarat, that Madhya Pradesh, Maharashtra, so below that it will be 22nd, and above that, that is the northeastern state, Jammu and Kashmir, Orissa, so that belt it will be 24th. Okay, and this is the due dates under QRMP. So that's what I have given in the first box. GSTR1 on a quarterly basis by 13th of the month following every quarter, and GSTR3B on a quarterly basis by 22nd or 24th of the month following every quarter. So filing is on a quarterly basis. Very, very good. Then what about the payment of taxes? So payment of taxes should be on a monthly basis. So in a quarter, for a month 1 and month 2, they need to discharge it by 25th of the subsequent month. And for the third month, anyhow they will be filing GSTR3B, that GSTR3B to be filed by 22nd or 24th, and they need to discharge the liability. So monthly payment of tax through PMT6, so just the deposit challan, there is nothing else. there is only deposit challan. But for this monthly payment of tax, we have two options, that is fixed sum method and self-assessment method. Fixed sum method means a particular percentage of the previous quarters or previous month liability we need to pay this month. So that is fixed sum method. Whereas self-assessment method means we need to compute as to how much will be our actual liability, and that actual liability we will be discharging, that is known as self-assessment method. And this has to be paid by 25th of the next month for the 2 months in a quarter. What about the third month? Anyhow they will be filing GSTR 3B, so there is no problem for that. Okay. Then sir, RCM paid through electronic cash ledger is also considered for computing 1%. No. So because anyhow that has to be discharged through cash ledger only, so that will not be counted towards that 1% cumulative. So only whatever GST that we pay under FCM, 1% through cash ledger is only counted towards that 1%, not RCM under not RCM, because RCM by anyhow you need to pay under cash ledger only, so that will not be counted. Okay, so this is for your Rahul. And then yes, so then B2B invoices may be furnished on a monthly basis in a invoice furnishing facility. So the supplier is required to furnish the details of invoices through an invoice furnishing facility if he wanted to give the credit to the recipient, because quarterly return monthly payment, the credit can be availed by the recipient only on a quarterly basis, because GSTR 1 will be filed on a quarterly basis. But to avoid that complexity, they have brought invoice furnishing facility to be filed on a monthly basis. So this invoice furnishing facility has got one disadvantage, that is only 50 lakhs of turnover can only be entered into IFF. And which means we need to choose between our buyers as to whom we need to enter, because the total should not go beyond 50 lakhs. Okay, so that is the logic. And I don't know why 50 lakhs are being given, but 50 lakhs only is the limit up to which only we can enter the details. So B2B invoices may be furnished on a monthly basis through invoice furnishing facility. Of course, IFF is optional, it is not mandatory. If that person wanted to give credit in the same month only, he will be putting it in IFF, otherwise not required. But one advantage is there of IFF. So whatever details that are entered in IFF, that will go to GSTR 2A, 2B of the recipient. Also it will come into the GSTR 1 of the supplier, that will be filed on a quarterly basis. So in that quarterly filing, this details will automatically come into GSTR 1. That is the advantage. And then QRMP is GST and wise. It is not like composition scheme wherein one registration, if you want to opt for composition scheme, all registrations also you need to opt for composition scheme. Not like that. So QRMP, because aggregate turnover is taken, means all registrations of the same permanent account number should be taken for counting the aggregate turnover, and this will be GSTN wise. Say if the aggregate turnover does not exceed 5 crores, and with respect to few registration you want to go for monthly return and few registration quarterly return, possible. That is possible. Okay. And what is the time frame for opt-in? So you can opt out of QRMP at any point of time. So whenever you opt out of the QRMP, so from that month onwards you need to file monthly returns. But to enter into QRMP, they have given a deadline. So that is, suppose if you want to enter into QRMP for a particular quarter, October to December, so you have a time limit till October 31st, end of that month, because thereafter you cannot go, because you have to file the returns under normal scheme. So October 31st. Okay. So before that, 2 months before means what? 2 months before the beginning of the quarter. So you remember, 2 months before beginning of the quarter, 1 month after the beginning of the quarter. Okay. So easily you can remember, alphabet A is 1, alphabet B is 2. Okay. Alphabet A is 1, alphabet B is 2. So 1 month after the commencement of quarter, 2 months before the commencement of the quarter. So you tell me what is the deadline for entering into this QRMP scheme. Suppose for quarter, that is September to, that is quarter October to December. For quarter October to December, 2 months before. 2 months before means what? August. So August 1st. And 1 month after commencement of the quarter, that is October 31st. So that is the deadline. Okay. So easily you can remember, A for after, B for before. And for A it is 1, for B it is 2. Just remember this, is it will be. So within 1 month after, and within 2 months before. So this is the deadline for the purpose of entering into QRMP. So within 1 month after, 2 months before, when? commencement of the quarter. Okay. Then condition to opt in. Last return must be filed on the date of exercising the option. So all the returns, pending returns that should have been filed. GSTR1 or IFF facility. The scheme provides the IFF facility for the first 2 months to be furnished. And what is the time limit for IFF? Same 13th of the month following every month. And details furnished in IFF need not be required to be furnished in GSTR1 again. Therefore, only invoices of last month of the quarter is required to be furnished, because for first month, second month, whatever details you furnish in IFF will automatically come in GSTR1. Only the third month details you need to enter. And exception. The said details of outward supply shall not exceed the value of 50 lakhs in each month. Okay. Each month it should not exceed 50 lakhs. Whatever details that you furnish in the IFF, value, not tax, value. And on non-opting of this facility, detail of outward supply to be made in GSTR1 on a quarterly basis. That is this. And payment will be in 2 modes, that is fixed sum method and self-assessment method. So we will see that there is a query. So GSTR3B monthly or quarterly, or GSTR3B quarterly only for QRMP. GSTR3B is always quarterly for QRMP. GSTR3B is always quarterly for QRMP, and for others it will be GSTR3B monthly. Very simple. Okay. And then, sir, is this IFF in the GST portal itself? Yes. Invoice furnishing facility is available in the GST portal itself. It is just like your GSTR1. Then, so payment of taxes under QRMP scheme will be under self-assessment method or fixed sum method. Fixed sum method, what is the percentage? The last GSTR3B that you filed is a quarterly GSTR3B, which means that previous quarter you went for QRMP. So due to that reason, we have a quarterly GSTR3B. So take that quarterly GSTR3B, whatever is the liability that you paid using cash ledger into 35% you need to pay now. Okay. So take the previous quarter. In the previous quarter, you filed GSTR3B. So you filed GSTR3B on a quarterly basis into 35% of the liability paid through cash ledger will be discharged as tax for the current month. But you don't have to just deposit that into PMT6. Okay. Then suppose for the previous GSTR3B, the previous GSTR3B is monthly. So which means this quarter only you are going for QRMP. So the previous quarter you did not go for QRMP. So take the previous quarter, the last month, whatever monthly GSTR3B you have. In that monthly GSTR3B, 100% of the tax paid through electronic cash ledger you need to deposit. So this is known as fixed sum method. This is a system calculated one. Okay. Whereas self-assessment method, when you select, which means you will do the computation as to this month what is your gross liability, what is the ITZ, and the net amount you will pay into the payment ledger. That is PMT6. You will make a deposit into the cash ledger. Okay. But there is a problem in self-assessment method. So self-assessment method, when you discharge some liability, but the actual liability of that month is more, then in that case you need to pay interest. But in fixed sum method, it is not like that. For example, for the month 1 in the quarter, say October to December quarter, October month I have paid under fixed sum method, so 3,50,000 I paid, whereas my actual liability is 4,50,000 for that month 1. So that 1 lakh when I pay, by the time I file GSTR3B, so due date of filing GSTR3B for that quarter is 22nd or 24th. By that time if I pay, I don't have to pay any interest on that. Suppose if I am paying later, I have to pay interest after the due date of filing GSTR3B. This is under fixed sum method. The same scenario let's see under fixed sum method. The same scenario we'll see under self-assessment method. In self-assessment method, what will happen? For first month, it is 3,50,000 we paid, but actual liability is 4,50,000 we should have paid. So 1 lakh we did not pay because of it. So when this 1 lakh will be paid, by the time you file GSTR3B, you are filing. So but you are paying, but even then there will be interest for this period. For which period? After 25th. For example, October month. October month you should have paid by 25th of November. So from 26th November till the time you pay that in 3B, you have to pay interest. But this period you don't have to count for fixed sum method. That is advantage in fixed sum method over self-assessment method. For each month, can I choose between fixed sum method and self-assessment method? Yes, I can choose between fixed sum and self-assessment method. So between these two, okay. The only disadvantage with self-assessment method will arise when your actual liability is more than the liability that you have declared. Suppose if your actual liability is equal to the liability that you have declared, unnecessary interest obligation will not arise, okay. Whereas in fixed sum method, when the people are not sure about their monthly liability, it is advantageous to go for fixed sum method, because so if there is any shortfall in payment also, no problem. If they discharge that shortfall by the due date of filing 3B, that is for that quarter, so January 22nd or January 24th, that will be the due date. By that time we can pay, and no need to pay interest also on that shortfall amount. Then any change in manner of filing GSTR 3B? No, there is no manner in there is no change in the manner. So normal 3B how you file, quarterly 3B also you will file it in the same way. Compulsory opt out. Suppose in any quarter in the current year, if it is more than 5 crores, automatically you will coming out of the QRMP scheme for the next quarters, okay. And even next year also you will be not eligible, because for the next year, previous year, we need to see it exceeds 5 crores now. Then interest on non-payment or short payment. So I told you, in case of fixed sum method, if you are not paying the tax by GSTR 3B due date 22nd or 24th total tax, then only you need to pay the interest, okay. So the tax liability net, so this is mainly for fixed sum method. The tax liability net of available credit on the supplies made or received was higher than the amount paid in the challan for the first 2 months in the quarter. No interest would be charged. Very, very important. No interest would be charged if the entire liability is discharged in GSTR 3B by due date, okay. Otherwise, interest at the rate of 18% per annum would be applicable from the due date of GSTR 3B till the date of making the payment. In case such payment of tax by depositing the system calculated amount is not done by 25th monthly amount, also 25th you have to pay. Suppose if the 25th you are not paying, then you need to pay interest for the period beyond that 25th, till that time you pay that month amount for deposit into PMT6, okay. So this interest for non-payment or short payment is in case of which method? Fixed sum method, not self-assessment method. You just write there FSM, okay. FSM, fixed sum method only this will be applicable. So definitely I am expecting a question about this interest computation in the forthcoming exams about fixed sum method and self-assessment method. If you want to know the illustrations related to interest computation, you can please check the amendments. Already I discussed in amendments video about the illustrations on how to compute the interest for fixed sum method and self-assessment method. You can see that, but it's a very, very important area, so for this exams, okay. Then late fee will be applicable here. Yes, late fee will be applicable for delay in furnishing GSTR 3B or GSTR 1. But for delay in payment of tax, there is no late fee. So only for 3B and 1. For IFF and all, there is no late fee. For IFF or for monthly payment and all, there is no late fee. Only for delay in filing GSTR 1 on 3B, there will be late fee. So this is about QRMP. And let's quickly complete the answers. First, can we give part details of the month in IFF and balance while filing GSTR 1? Yes, you can. So whichever recipients to whom you wanted to give the credit, you can show the details in that particular month IFF, and remaining details you can furnish later. Then, sir, in which cases GSTR 1 can be filed quarterly? So whose aggregate turnover during the previous year does not exceed 5 crores, or whose aggregate turnover during the current year does not exceed, any current year does not exceed 5 crores. So there can be filing GSTR 1 on a quarterly basis, only in this case, no other case. Now there is no other possibility. Then in both FSM and SAM, ensuring sufficient balance in the electronic credit ledger is sufficient without deposit using PMT6, or is it only for SAM? No, for fixed sum method you have to deposit even if you have the balance in the electronic credit ledger, because actually fixed sum method takes into consideration the previous quarter. Say for the previous quarter my liability is 4 lakhs. Out of that 4 lakhs, 35%, that is 1,40,000 I have to deposit, but that much balance is already there. But which I am taking? I am not taking 4 lakhs entirely. That 4 lakhs is what? Liability paid through cash ledger. So which means, say for example, my liability for the previous quarter is somewhere 10 lakhs. 6 lakhs is the credit ledger. 4 lakhs is paid through cash ledger. So which means I need to take 4 lakhs into 35%, 1,40,000, even though whether the credit balance is there or not, I have to deposit into the cash ledger. That is about fixed sum method. Fixed sum method, the deposit I have to make into the cash ledger only. Whereas under self-assessment method, we have that relief. What is that? I have actually computed how much is my liability. My liability is say somewhere 2 lakhs, but already the balance is there. Credit ledger balance is there. So then no need to make any deposit because the sufficient balance is there in the credit ledger. So no need to deposit anything into the cash ledger. So that is about self-assessment method. Okay. Then how can we claim ITC through QRMP scheme? Can we claim ITC on a monthly basis, as we are not filing GSTR 3B on a monthly basis? Where we are claiming ITC, it will just come in our GSTR 2A or 2B. So the person, say for example, I am going for QRMP scheme. So I will be getting that ITC in my 2A or 2B, and that much balance of ITC is there. I am not claiming it. So that much balance is there. Even I am not paying it also. Remember, I am only depositing into my electronic cash ledger. I am not paying or adjusting against the liability. All this adjustment will happen on a quarterly basis only when I file GSTR 1 or GSTR 3B. So sufficient balance of ITC is there. That is what I will be checking. Okay. So in QRMP scheme under FSM, whether RCM liability is also considered. So first of all, under fixed sum method, we will not see what are the transactions. We will just take the previous month or the previous quarter 3B. How much ever is paid through the electronic cash ledger. How much ever is paid through the electronic cash ledger. 35% of the tax liability in cash paid in the preceding quarter. That includes even RCM liability also. Whichever is paid through electronic cash ledger, out of that 35%, if it is monthly GSTR 3B, 100% only will be taken. Okay. So we will not see current month whether that RCM transaction is there or not. So previous month it is there or not, we will not see. So that details we will not check. Okay. Then next, sir, if my last quarter cash payment only had late fee or RCM, then can I take it as 0 under fixed sum method? Yes. Then I can take it as 0 under fixed sum method, because first of all it is system calculated. You don't have to do anything. So when you select that option, by default it will happen. Okay, fine. So the time limits for various returns. GSTR 1 is a return that needs to be filed by every person, every registered person. We have two options, monthly and quarterly. Monthly it is by 11th of the month following every month. Quarterly is in case of QRMP whose turnover does not exceed 5 crores and they opted for QRMP, 13th of the month following every month. Even for invoice furnishing facility also, first 2 months in a quarter, it is 13th of the month following every month. Okay, just remember these due dates because for MCQs it can be asked. And returns chapter used to be a neglected chapter up to last attempt, but this attempt somehow I feel like a good number of questions can be framed mainly because of QRMP scheme. Okay, then GSTR 3B, aggregate turnover during previous year exceed 5 crores means they will not be opting for QRMP. So therefore monthly 20th of the month following every month. If the aggregate turnover during previous year does not exceed 5 crores, so then they would have opted for QRMP. And 22nd of the month in case of notified states. What was no notified states? I asked you to remember Gujarat, Madhya Pradesh, Maharashtra. So that belt up to Telangana. So below all the states below that. So that cross, Gujarat, Madhya Pradesh, Maharashtra, Telangana, all the states below that will be coming under this notified states, for which 22nd, and for all other states it will be 24th. And sir, is it optional QRMP or mandatory? By default they will be taking, but if you want to come out of the QRMP, you can come out of the QRMP and continue with monthly also. So when you are continuing with monthly, then monthly return time limit only will be applicable to you. Then CMP 8 is a return, is a statement that needs to be furnished by a person who is opting for composition scheme. So there is one problem with CMP 8. So there is registration one point. if a person is not filing 3 consecutive returns and opting for composition scheme, then that person's registration is liable to be cancelled. Is that 3 quarterly returns or annual returns? Because now GSTR4 is an annual return, it's not a quarterly return. In the place of GSTR4, they added a statement called as CMP8. So therefore, whether we need to understand it as 3 quarterly statements or 3 annual returns. So for that reason, so there is an interpretation that is available which says that, so we need to consider, because at the time when they drafted that cancellation of registration point, at the time GSTR4 was a quarterly return. So therefore in the place of GSTR4, CMP8 is added. So which means that if 3 quarterly statements not furnished by that person, then the registration is liable to be cancelled, not 3 annual returns. Okay. So CMP8 to be filed by 18th of the month following every quarter. So for that quarter, because this tax payment, how is it different from QRMP? So composition scheme taxpayers will pay tax also on a quarterly basis, even return also on a quarterly basis. But QRMP, they will file returns on a quarterly basis but pay tax on a monthly basis. Then GSTR4 is an annual return for a person who is opting for composition scheme. And what is the time limit? 30th April of the succeeding financial year. 30th April of the succeeding financial year. And GSTR5, return for a non-resident taxable person. So NRTP. So NRTP is a person who comes from outside India to India, who is not having physical place of business in India and who is making supply of goods or service in India. So that non-resident taxable person, they need to file return by 20th of the month following every month, or 7 days from the expiry of registration, whichever is earlier, because they will be getting a temporary registration due to that reason. So every month they need to check 20th of the subsequent month or 7 days from expiry of registration, whichever is earlier, and they need to file, and it is a monthly return only. GSTR 5A is a return to be filed by a OIDR supplier located outside India who is making supply to a non-taxable recipient in India. They need to file return by 20th of the month following every month. And GSTR 6 is a return to be filed by input service distributor, ISD. So an input service distributor will be filing a returns on a monthly basis. Remember, 13th of the month following every month. Okay. And GSTR 7 and GSTR 8 is TDS and TCS. So TDS deductor and TCS collector, that is e-commerce operator, they have to furnish return in GSTR 7 and 8 by 10th of the month following every month, and they need to pay tax along with that. GSTR 9 is an annual return, and that annual return is to be filed by 31st December of the succeeding financial year. 9A we don't have. Previously it was there for composition scheme, and that's where GSTR 4 has been replaced. Even though GSTR 4 is an annual return, but the time limit for filing GSTR 4 is not 31st December of the succeeding financial year, it is 30th April of the succeeding financial year, just 1 month. Whereas normal annual return is by 31st December of the succeeding financial year. GSTR 9B is a return to be filed by an e-commerce operator. Okay. And then GSTR 9C is there, reconciliation statement. And that reconciliation statement needs to be filed by 31st December of the succeeding financial year only. So whether that reconciliation statement should be audited or self-certified. So that should be audited. For your exams, it will be audited only. So audited, and that too when the aggregate turnover exceeds 5 crores. So GSTR 9C's applicability will come only when turnover exceeds 5 crores. Not 2 crores, 5 crores. That is the extended limit. So aggregate turnover for current year exceeds 5 crores. So then only GSTR 9C reconciliation statement will come into picture, and it will be audited. So previously it was 2 crores. Now the limit has been extended to 5 crores. And GSTR 10 is a final return, and that final return is to be filed by a person so who cancelled his registration. Either he made an application for cancellation, or suo motu registered proper officer had cancelled the registration. What is the time limit for submission of this final return, GSTR 10? So 3 months from the date of cancellation, that is effective date of cancellation, or order of cancellation, whichever is later. So for order of cancellation, don't count 3 months. Only for the date of cancellation you count 3 months. Or next point, order of cancellation. So A or B, whichever is later will be taken. Not whichever is earlier, whichever is later. Remember that. Then GSTR 11 is a return that will be filed relating to inward supplies of a person who is claiming refund, UIN holder, a unique identification number holder will be claiming refund of the GST paid with respect to their inward supplies because their outward supplies are exempted. Who is an UIN holder? UN agency or embassies or consulates will be coming under UIN holder, and on their inward supply GST paid they can get as a refund. For that purpose they will be filing a return as to what are all their inward supplies, that is GSTR 11. So these are the various returns that we have, and see this. So this can be asked as a short note question. Who are not required to file GSTR 1 or 3B? Who are not required to file annual return? For both the answer is same, tonic. For both the ends, for both the questions the answer is same, tonic. But in case of who are not required to file GSTR 1 or 3B, it is 2 T's. T square, tonic, T is square. Whereas GSTR 9, it is tonic. Okay. So because TCS deductor is required to file an annual return, that's why. So what is that? So what is that? Tonic. You just remember tonic. TDS deductor and OIDR supplier located outside India making supply to non-taxable recipient. N, non-resident taxable person. I, input service distributor. C, casual taxable person. They are not required to file GSTR 1, GSTR 3B and GSTR 9. However, extra point is that so TCS deductor is also not required to file GSTR 1, 3B, but annual return they need to file. Okay, so that is this. Got it? And then late fee for delay in filing returns. What is that late fee? That is given in section 47. So if it is all returns other than annual return, 100 rupees for every day subject to a maximum of 5,000 rupees. So there is practically, if you see, there is different types of late fees. So nil return, one late fee is there, other than nil return another late fee is there, like that different types of late fees are there. So now we need to see what type of return it is. So it is all returns other than annual return. So 100 rupees per day, simple. So the 10 rupees, 25 rupees which is applicable in practice is not applicable in case of exam. So it is 100 rupees per day subject to a maximum of 5,000 rupees. If it is other than annual return, 100 rupees per day subject to a maximum of 0.25% of the turnover. So the same late fee we need to pay even under SGST Act. Suppose if there is a delay of 30 days. So 30 days into 100, 3,000 rupees we need to pay under CGST and 3,000 rupees we need to pay under SGST, like that. Okay. Then now filing of returns through SMS is possible. Nil returns, only nil returns means all the fields in the return should be nil. All the fields in the return should be nil. Then filing of returns through SMS is possible. Which return? GSTR 1, GSTR 3B and CMP 8. These three returns only. So CMP 8 is for a composition scheme dealer. They can file these returns. So nil returns through SMS provided all the fields. Suppose only input tax credit is there, liability is 0. So can a nil return be filed through SMS? Not possible. So we have to file the nil return through the portal only. Through SMS it is not possible. Okay. So all the entries in the return should be nil. And rectification of return. So rectification of return is, so there is a time limit for rectification of return. So we need to take, so first the date on which September month return needs to be filed. Okay. So actually this due date is there. There is a confusion as to whether we should take it as due date or actual date. Whether we need to take it as due date or actual date, there is a confusion. Okay. So for rectification of return. So actually it is given in the law as date of filing return for the September of the succeeding financial year or date of filing annual return, whichever is earlier. Okay. So therefore actually it should be the actual date but not the due date. It is the actual date but not the due date. But in study material they gave both. They gave first this and thereafter they gave, so we need to interpret as actual date. So that is as per ICA study material also. Okay. So but this is also given, due date is also given. So therefore you remember for exam actual date of filing GSTR 1 of the succeeding financial year September month or date of filing annual return, whichever is earlier, will be taken as the due date for rectification of returns. Okay. And details of outward supplies to be mentioned in the return. Outward supply we need to see whether it is B2B or B2C. B2B supplies or B2C supplies. Okay, it's B2C supplies. B2B supplies, interstate or intrastate, always we need to enter invoice wise data, B2B or B2C. B2B always that is invoice wise, let it be intra or inter. B2C, if it is interstate, if the value of each invoice exceeds 2,50,000, then it will be invoice wise. If the invoice value does not exceed, if the invoice value does not exceed 2,50,000, then it will be state wise consolidation. Okay, so B2C supplies interstate. If the invoice value exceed 2,50,000 per invoice wise details needs to be uploaded. If the invoice value does not exceed 2,50,000, then state wise consolidation, all those invoices. What about intrastate supplies? In case of intrastate supplies, you need to do consolidation, and you don't have to report state wise. Okay, so please make these typos. Please make correction in your book, these typos. Okay, so B2C supplies, interstate supply, invoices does not exceed 2,50,000. Intrastate supplies, consolidated details of all supplies to be uploaded should be there. Okay, and then with this, so returns is over. So there are few queries to our friends. Under self-assessment method, does it have to be supported by workings, or it can be assumed as 0 without any workings? We don't have to share any workings. But whenever the department is asking, we need to submit the details that why we did not pay for that particular month. So usually that interest levy will happen during the notice and adjudication stage. So at that time, if we submit the information, that is sufficient. Then in T square, tonic and tonic, C is also different, right sir? So casual taxable person only. Okay. Correct. So here C will be correct. Composition scheme dealer. Here C will be casual taxable person. You are right. So because a casual taxable person is required to file GSTR 1 and GSTR 3B, but a person who is opting for composition scheme is not required to file GSTR 1 or 3B, they will be filing CMP 8. So the C is also different. Here C for casual taxable person annual return, here C for composition scheme taxpayer. Okay. So that is with respect to returns.